All right, excellent. Good morning. Screen share up together. All right, good morning, everyone. It's Monday, July 20th, 2026. New day, fresh start. New week, fresh start. Welcome to the morning game plan. I'm Manny. Every morning we come in with the same goal. The one goal, build out the structure before the open so that we're operating in alignment with the day's dominant forces, identifying the important levels and understand what the market is trying to do before real money gets involved. All right, we trade live, we break down the market in real time, and we focus on the decision making that leads to consistency. No guessing, no chasing. All our trades follow a logic plan so that we can repeat what works. Okay, structure first, execution second. All right, let's jump in. Let's build out the game plan. All right, so immediately it's Monday morning, right? So I want to start off on my weekly time frame. Good morning, Nash Rancher. Good morning. Morning, Sniper. Good morning, Delphine. Okay, I got everybody. I think I got everybody. If I missed you, chime in. I will make sure I don't forget anyone. All right, guys. So team, let's build it out, right? So I'm going to start off on the weekly time frame. Just want to get an idea for how last week shaped up. Okay, and there's not really much to tell here. We're still in this larger balance area here that started, our low being framed out at 72.32 and our all-time high being 76.48.75. Okay, more importantly though, I think that we can safely assume that really the balance area low, at least what I'm using, is going to be 73.50. Okay, you can see that here. It's you can see it more clearly on a daily chart. So let's switch over to there and get a quick look at that. All right. So I put this measurement tool. I'm using this quad measurement tool here, and I'll get into that in a second. But first, I just want to show you what 73.50 is. You can see here that the first time it acted as support was on May 12th. Way back on May 12th, the low came in at 73.63, so roughly thereabouts. Then again on May 19th, we made a low of 73.54. Again on May 20th, okay? And then pay attention here, right? So then on June 5th, we came down, we tested it, and for 2 days, we bounced there. And then on the 10th, on the 9th, that week, we tested below it, and the market looked below there and failed. These sellers got trapped, okay? And that ultimately gave us the fuel to move higher. All right, so let's pay attention to that, because now if we continue to follow that logic chain, right, here's what happened. Following that, so these sellers got trapped, market tried to auction lower, it was rejected. Okay, we came back in after we converted it on the big gap up. We traded down for a couple of days, but look, again, we came in and we tested it. We made a low of 73.57 on June 26th. We bounced again, and then we started to move higher. All right, so I'm using that 73.50 as my balance area low. Okay, knowing that if we do get below 73.50, it doesn't really prove anything. We can just test down to 72.32, but certainly that would be a sign of weakness. And I think that more importantly, we have to be paying attention. We'll have to pay attention to, if we get down there, we'll have to be on super alert, super wide-eyed to make sure on alert for looking for any trap trades. All right, let's just remember this. Obviously, this big low here, 73.57. If we look below that level and we find acceptance, that's a big tell that, hey, we're on our way to test 72.32, maybe even lower. But for now, the market is just in balance. It's very similar to what we saw last March. All right, let me just go through that quickly. You can see here last March, right? What did we do? So there was a time where we were just bouncing around here, and I remember the midpoint was like 6,600, and I'd written about it that, hey, if we could find acceptance below 6,600, hey, look at this, right? You see how many times the market weaved that 6,600 area, right? And we weaved it here. We came down below, we reclaimed it, tested above it, and then finally it gave up the goose. But with the one thing that I'm that my focus is surrounded by is that this chart pattern right here, this started, guys, look at this. This started in October 6th. It didn't resolve until March 16th. Okay. So that's just about 5 months of balance, chop, distribution that ultimately auctioned lower, finding buyers at the 63.53 low. And that, if you remember closely, that was at the end of March 30th. That's what started the Artemis to the moon move. Okay, so we launched, we came up, we made our initial new all-time high on May 15th. I mean, but as the market got up here, these are the best markets, right? Because it was just rip roaring to the upside, easy, just buy pullbacks and hold on to it. Not really that complicated. Though I often say that when you see that kind of market, that is the time where you want to take advantage of that. You do not want to fight that move. That is the time to pad your account. The market is making it very simple enough, and we should hope to have more moves like that. Okay, now things get a little bit more complicated, where we really have to put on our nerd glasses and focus in on what this balance area is telling us. So for now, we can easily see that 74.50 is going to be a short-term balance low, followed by 73.50. And that's why I built this out here. I put this quad measurement tool to kind of give me that visual reference of where I am within this balance. Okay, so this is just a simple, 25, 50, 75 marker tool that I use when we get into balance areas. I find it very useful to let me know, okay, if we get down below the 50, are we going to find buyers? If we test down below the 100% and we find acceptance, we start moving lower. That would be obviously very bearish. Of course, we're looking for breakouts above the 76.20, 76.30 zone. All right, so that covers the higher time frame analysis. Let's take a quick look at the 4-hour chart and see if that's lending us any clues about how we want to approach the day. I think I know that there's something important that I want to point out to you here. Okay, so this is what I was preparing this morning. I was going over some of my stuff, and I looked, and if you look at just a regular trading hour session, I think this gives us a really good, excellent reference, guys. Because look, on Friday, so we had the gap down, right? We gapped down on the 17th. That was the big gap down, and then on the following later on in the session, we kind of rallied from the overnight weakness, right? But what did a regular trading hours session do? Well, the regular trading hour session could not close the gap. Okay, so we looked above, and we didn't look above. We tested the high and then just auctioned lower. And so let's keep an eye on this box here, right? So that's delineated by 75.50 being the low. The exact low is 75.48. Let's just call it 75.50, okay, just for simplicity. 75.50 would be the higher end rate, the higher portion of that balance area, and the lower portion is 75.40. So tight 10-point band. I love it when they're tight like that because it just gives us really tight risk to monitor. Okay, so how are we going to approach this level? Well, this is pretty easy, right? If the market gets into this area, right, 74.50, 74.40 to 74.50, and we can rally above it, and that converts to support, then we know, hey, it's game on to the upside. We're going to go up there. We're going to test 7,600. We're going to test 7,630, right? So if we come back down, we find acceptance. Friday's high access support, then we're looking for moves to the upside with tight targets and continuation to maybe test the upper end or upper range of the balance area. Conversely, on the downside, if we get the acceptance below 74.50, 74.75, right, immediately as our focus then starts to shift towards a test lower, going lower to test 73.50. At that point, what we're going to want to do is we're going to want to monitor the 74.50, right? And we can also use our overnight low. We'll get to that in a moment. But at that point, we're going to be looking for short trades that get us into a test down to our 73.50 balance area low. Right now, we're just dead in the middle of it. It could turn out to be a really boring day if we don't break out of this range, because this setup here, be mindful of it, that this is really choppy, and it can lead to there's directional indecision. And when there's directional indecision, that is the worst time for day traders, unless you are a mean reversion trader and that is your style. You want to be very careful here. You want to be mindful that you can easily be in a trade, try a directional move. You could be right and still get stopped out, just as the market auctions back and forth, chopping around, trying to figure out its next move. We want to sit tight. We want to be disciplined. We want to sit on patience at that point. Okay. All right. So let's get to the 15-minute time frame. Let me know if you have any questions on the higher time frame, and then we'll switch over to the 15-minute chart. We're going to map out the most bullish case scenario, the most bearish scenario, and we'll talk about a couple of trap trades. All right, let's get the 24-hour time frame on here. So it's 200 hours. All right, let's talk about the most bullish scenario. Let's clear that out. Let's get these charts to match. I'm a little bit tight on time. Okay. All right. Going into our most bullish scenario. Hey, we know it's pretty simple, right? We have that 75.40 a range low, which we just tested it in the overnight session and it was rejected, and the market's hovering right below it. So in my most bullish scenario, price would go into that gap, breach and test above the overnight high, right? Test to see if there's anybody home up there. And on any pullback, we're gauging to see what type of a balance holds there. Right? If we're seeing absorption, if we're seeing sellers trying to push lower, but 5-minute candles, your tick charts keep closing at the top portion of that print, we're going to start to think, okay, we're starting to form some acceptance up here, and we're going to monitor for any type of pullback that gets us in close to our exit, right? Because close to our exit, it will help us keep those losses low in the event that the trade doesn't pan out. Okay, but at that point, for the most bullish scenario, it's holding value area high at 75.35. It's holding yesterday's high at 75.39, and we're going above the overnight high at 75.45, and we're looking for continuation up to 75.50 and possibly even a test to Wednesday's low, or perhaps Thursday's early morning low, where we initially rallied and then fell from, okay? And that price would be, let's see, what is that low? That 75.75, yeah, 75.75 was important on the way down. All right, so that's the most bullish scenario. Hey guys, let's talk, while we're on the bullish chart, let's talk about the bullish trap trade. So the bullish trap trade, just simply, we discussed it in our higher time frame. It is in alignment with the higher time frame. So in that case, right, we're just doing the opposite of what we just discussed in the most bullish scenario, where price gets up into this area, and instead of seeing that acceptance, we start to get prints that look like this, where we're leaving wicks on the top side, and price is just unable to gain a footing, right? But we need a reference on the downside so that we're not getting trapped in an acceptance, right? So for that, I'm going to use this low here that we just made. So that low just came in at 75.21. If we can get below that low of 75.21, I think there'll be plenty of opportunity to get us into a move lower. So where we test below, we're already getting these types of prints here. So we have an idea. Now we're just stalking an entry. But if we can get below this 75.21, right, or 75.30, then we're looking for that trap to be sprung. Maybe we spike up to value area high, yesterday's high, but we're looking for a move right back down to the settlement, 74.9775. All right, let's talk about the most bearish scenario. Bearish scenarios are fun because when they when they materialize quickly. And for that, we're going to move over to our right-hand chart. All right. Let me know if you have any questions about the most bullish scenario. If you didn't get any of those levels, let me know. I'm happy to repeat them. But let's keep it moving. Let's look at the most bearish scenario. If this materializes, team, it's going to materialize fast. So we're going to break, and immediately we're going to be able to tell, because price is not going to stop at this prior high. 75.15 to 75.17 is going to be our reference marker. If we just cut through there like a hot knife through butter, and we get back below 75.15, all right, at that point, we're saying, hey, you know what? This is a liquidation break. See if we can catch a good entry that gets us in close to our exit, right? Always want to get in close to our exits. But at that point, we're looking for pullbacks or retracements, maybe up to 75.21, that get us in a short trade for a test down to the settlement. And then we'll reassess once we get there. All right. And then let's talk about the bearish trap trade while we're on this side of the field. Let's talk about if we get the break, right? Assuming we get the break and we test below the settlement, right? It's a hot knife through butter. It breaks through all of those levels. And you know what? We're thinking liquidation break. We're thinking something bigger is a miss, right? But we get to the overnight low, 74.82, or even yesterday's low, 75.73. And suddenly, you know, price just stalls out, right? It looks hot when it's getting down there, but all of a sudden, you know, 10, 15 minutes later, we're not going anywhere, and we're putting in prints that make us think, okay, maybe the move's over. It's always hard to tell when these liquidation breaks end because, you know, we all have recency bias, right? But at that point, we're going to look for closes above the overnight low, above 74.82, above yesterday's low, 74.83. We're going to look for pullbacks. At that point, we're looking for entries to get us up to the settlement. All right, guys, there's the opening bell. I tried to get everything in before that happened. And let's see what the day brings. I'm happy to be back with you guys. I kind of missed you guys. I haven't been around for a little while. I've been traveling and taking care of the kiddos. I hope you guys are enjoying your summer. I kind of miss coming on here with you guys every morning, but you know, I've been listening in to David and Bo and Niels and Rich, and they just got, you know, I sit back and I'm able to learn. I'm also able to employ some of their tactics, so that's always fun. I hope you guys are learning a lot from them. You know, a bunch of good traders sharing their information, and that's always been the idea with the pit, right? Is to get as many traders in here sharing their perspectives, so that everyone can benefit. You know, 5 traders are better than 1. I'll tell you that much. All right, so immediately, team, here you see we're rallying, right? We're getting up to that upside. I'm going to configure my charts, and then I'm going to switch over to my trade chart. All right. Okay. Looks like the ATA had me in a short trade here, and while I was off screen, and that was stopped out. So not a good start to the week. Not a good start to the week. That's not the way I wanted to start the morning, but I also take it with a grain of salt, right? So be it. Let me take a look at the order flow, see how the low formed. Yeah. Okay, so thus far, our regular trading hours open is 75.34. Let's monitor that. Okay, let's keep an eye on that. Let's keep an eye on that to make sure that we use that as our fulcrum going into the morning. Again, remember the level that we are at. We are at this big level at 75.40 to 75.50. I'm going to really take it easy into this area. I want to make sure, I just don't want to get trapped. I'm already starting off the day with a stop out, right? Not really good the way I'd like to start it. Interestingly enough, though, let me just share something with you. It's really important to have an idea for your statistics, team, because you know I have studying my own performance over the years. There's something that I've learned that when I start off, if I have a red Monday, okay, there is a higher probability. I've only got a 42 or 47% chance of having a green week if my losses are over a certain amount. Okay, so if I have a red Monday and it's under a certain amount, I know that it's very easy to recover. Okay, if my red Monday goes above that amount, I have a low probability of having a green week. Okay, so I want to share that with you because I think it's important to point out. So when I reverse engineer that, the way I approach it is, hey, on Monday, that becomes my cap. I'm not letting my loss, if I'm having a red Monday like I am right now this far, I'm not letting my losses go beyond that number. I've called it early on Mondays after, it took me a while for it to set in, for me to realize what was happening. But that's also kept the tertiary effect to that has been that, I take Mondays light. It's not, if I have a red day, I'm like, all right, it's part of the business. I also know that if I keep the loss small, I have a higher probability of recovering it. It allows me to do other things on Monday. And it makes it dilutes the emotional effect of having a bad start to the week. All right, so that's interesting enough that I can share that with you because I'm just starting off on the red side of the fence. Get a little live squad going on here. Let me know if you're in a trade. Help me out, post it. Let me know what's going on. Let me know if you are in some type of a trade. I'd like to know it. All right, look, so we're testing. Oh, hey, look, heads up, guys. Heads up here. 75.44 quarter, all the way up to 75.45. Huge amount of contracts up there traded. I'm seeing over 2,000 contracts hitting the offers. Same equal amount hit the bid. So hit the sell side, kind of. That's why I pulled off a little bit. But when you see that kind of volume, guys, it's going higher. Yeah, I'm just looking at how we got here too. Yeah, it's certainly going to move higher here. Let's see if we break through. Let's see if there's any strength and momentum. Immediately, my brain shifts to, hey, can we gain some acceptance up here? And if we do, then hey, I want to start thinking about I want to start thinking about getting into a long trade above the overnight high, as we discussed in the pre-market. Wait, why did this change colors on me? Dang it. That's not the style I want. All right, I'm gonna have to take a look at this later. I'm not sure why it's, maybe it's to switch styles. Hang on. There we go. All right, so hey, heads up here, right? I'm gonna switch out to, I'm going to take off the overnight session. Look at where we are, guys. We're testing right into that gap. Remember that low was 75.48 quarter to the tick. And we're now coming in to test that. It's going up there. It's going to test. Never know if there's going to be a pullback. MJT has a target of 74.9681. Prince support at or just under that price, 74.9681. Again, if you're following along, that is a cash number. That's SPX. The equivalent of 74.9681 on ES today would be 75.36-ish. 75.36 would be the fair value to ES. One of let's see, July 20th. Where is that? Okay, here it is. Yeah, so one of the things that I'd mentioned earlier, I missed coming in here with you guys every morning. I got into the habit of just kind of starting my day this way. But hey, you know what? Man, have I been productive. I've gotten so many other things done. Last week, I did not have a super active trading week. I didn't trade on Tuesday. I didn't trade on Wednesday. I didn't trade on Monday. I think I took like 1 or 2 trades on Monday and then I left early. I traded Tuesday. I didn't trade on Wednesday and I didn't trade on Thursday. So hey, heads up, keep your eyes open at 75.63 to 75.67. Watch that there for a potential bump in the road. Okay. Man, starting down. So on that trade, I lost, $800. So that's not really a good start to the week, right? Not happy about that at all. How did you guys do last week, huh? Was it the chart looked kind of rough, to be honest with you. It didn't look like it was there weren't very many smooth moves. So I'm just wondering how you all fared. Okay, looks like I am in a oh no, this is one trade, sorry. Just switch out that account. Okay. Oh. Yep. All right, looks like we are in a CCI crossover method long at 75.47, looking for 75.52 for the first scale. All right. Kind of like that idea here. We came up hot and heavy, but we are into that zone, right? We are into that zone. So I want to be careful here, right? I don't want to blindly take a continuation long here. Not on the first test. I'd rather wait for it to pull back. Speaking of the higher time frame and this particular zone that we are in, right? We're dead in the middle of a weekly balance. I think we covered that earlier on the open, right? So we're in this large balance area. And one of the things that, you can see it here delineated by this quad measuring tool with our low being 72.32, 76.48 on the top side. Let's just see, monitor this trade. I am going to keep a short leash on this one, to be honest. I do have a rule about running the PTG ATAs is that, the one hard rule about it is that I have to stay out of the way. I have to allow that strategy to run independently of me. I've configured the risk parameters. They have dedicated accounts. So I really need to stay out of its way. It's not as easy as you would think. But yeah, that's the rule there. See, hopefully we can get some momentum. And then I'd like to talk a little bit about this larger, higher time frame balance area that we're in. I think it's important to know, and I think it, I think it frames, in my opinion, it's framing a lot of the, it's framing a larger perspective of the market in general. Okay. But let's see, looking at 75.52, I'm going to lower that a little bit. I'm not going to ask the market to make a new high in order to get me my first scale. I want to be judicious about this trade, as I do not want to have too much of a drawdown on after the first initial loss, right? Typically, I'm willing, and I'm willing to allow trades to run, allow them to play out. But when you take that Monday statistic into play, I just want to be a little bit more judicious about it, because I would like to trade the rest of the day, considering what I'm facing for the rest of the week. All right, so I took that first target there at let's see, so it was 47 quarter was the entry, and I just took a 49.75. So 2.5 points on the first scale. Just looking for that base hit. And yeah, it's pretty tough when it's your own money, right? 100%. 100%, J-Mark. 100%. To your point, I wrote an article on Substack. It's free. You guys should go check it out. And it speaks to why I think a lot. If you trade your personal account, why you should add a prop account as well. But to J Mark's point about it's different when it's your money, right? It's these are just some regular trade. So when it's your money, and you trade differently. And one of the points that I make in that article, or in that article, is that if you're going to add a prop account, you should be cautious about how you have to trade differently. It's a different type of trade. You'll know it if you experienced it, but just the same way, think about it like this: if you're trading an evaluation versus trading a funded account, you kind of have these differences that you make. All right, so pulling off here a little bit, quite a bit. Cautious. Yeah, I got a break even on the last contract there, so I'm glad I just took the base hit and stepped out. I'm glad I did that. That's really where I wanted to be. We didn't quite satisfy the area that I was looking for, but 75.63. That's okay. Took the base hit. Yeah, I had a continuation level, and it's let me see here. Hang on. I might, it looks like we're getting rejected. Let me just move to a time-based chart. I have to check something here. Yeah, that was not right. Okay. All right, so now we're chopping around. So here, heads up. So this is what we want to pay attention to now, right? What I want to pay attention to really closely here is, does price get swiftly rejected relative to this prior high that we just put in? Okay, so this is the high. We all know what this area corresponds with. We just filled the gap from last week, right? So is it a swift rejection? Or do we just start popping around? Let me just put it on this side so you can see it clear. Is it a swift rejection where we just come back up, we test the overnight high, and then, there's nobody home and we just start moving lower? Or do we test below and then we start doing something like this, right? Coming back up, higher, lower, higher, and then we just stay in this zone, right? That's going to signify, hey, bears are not in charge. That's just normal price action. That is not a swift rejection that we would see in the EFS. Again, this is where it pays to have a trade plan, because you want to know more or less what you want to do when price reaches these areas. Again, I know a lot of you chime in and checking in here for an assist with the trade plan, and that's why we enjoy going on live and just discussing what we're doing. Live trading, real-time technical analysis is kind of what we do here. All right, so we're getting that move a little bit lower. Remember the level that we spoke about earlier, right? So we want to see this price get below this early low, get below today's low, which is, by the way, not a good low. If I'm placing a bet right now on whether the low of the day is in, my bet is that it is not. Okay, so our low of the day is 75.3275. I believe at some point that gets taken out, and we trade below it. Again, that is closely correlated with the opening print at 75.34, as well as yesterday's value area high. So it is possible that we trade down there and we test into value, and that maybe we trade as low as as Friday's point of control at 75.30. Maybe we even get down to the overnight mid at 75.15. Maybe we even go down to Friday's midpoint at 75.06. We'll see. But or we just look below the RTH low and come back and trade and re-auction higher, and that would just be a part of this larger acceptance. Time out. All right, sorry about that. Okay, look above. Aggressive traders are selling it up there, right? They're looking at that. Look above and fail. They're short back below 75.45. Let me know how you traded it. There it is. There's the break. There's the break. All right, nice, 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 nice. Did any of you guys catch this short? Somebody has to have. Again, post your questions if you have any. I'm going to, so one of the reasons why we have to be careful, again, like we pointed out in the pre-market, is on this larger balance area, right? Let me just get back here, turn on my combo chart. Oh yeah, go ahead, break, baby, break. No problem with that. No problem with that. Let's watch this closely here, see what materializes. Let's see here. Again, going back to that trade plan, referencing those levels, making sure that I'm in alignment with what I designed earlier. It's crucial for me. My trade plan is kind of like my North Star every morning throughout the day. You know, there have been days where I've actually traded the market, you know, from my phone. And, you know, I had my plan on my phone and, you know, I know the levels, I know what I'm willing to risk. Yeah, there have been days I've done that. Okay, looks like we're finding some footing here at 75, 75.25. I mean, again, so we have an initial range here of 26.75 points. Hey, we have to be mindful also, team, that, you know, this Monday mornings is definitely get my attention. Let me just look at how that high formed and where it formed. 75.52, 75.52 is the current RTH high. Yeah, you know, that's. Hey, good morning, Easy Money. Good morning, pal. Yep. Okay, cool. No worries. There's more. There are more trades to come for sure. So one thing that, okay, so now let's see, what is this? No, this is something down here. 75.21. Yeah, okay, 75.17. Remember, we outlined 75.15 to 75.17, or let's just round it out. 75.15, 75.10. Let's watch that. Let's watch 75.15 to 75.10. Just nothing that I have pre-planned in that area. That's just a day time frame reference. It's kind of where we bumped our head up against that level here. That was in the overnight session. We made the early high yesterday at about 8:15. That high was 75.17 again, and then it looked like we tested up 75.10 multiple times. Had a look above and failed there, traded lower. They could not make a new low, and then it was onto the upside. One of the articles that I wrote back in March 6th, during that, you know, if you guys remember, we spoke about in the pre-market, the prior distribution, the prior higher time frame distribution, which transpired from literally, it took 5 months to unfold. Just keep it on regular trading hours only. All right, that started there at about roughly about, yeah, I think it was October 12. No, October, let's see, it was when we had this breakout here. Let's just look at this more closely. Maximize this. Let me just maximize this to the greatest capacity. Right, adds a little bit of context. Let me see if you guys can see that well. So hey, look, you see this? This was, we had initially rallied higher, right? There was some wave counts ending right in this area, okay? And then we had this breakout that failed, okay? It looked a lot like what we just had in this distribution, where we drove higher, had another push, an up thrust that failed, put in a lower high, auctioned lower, came right back up and tested it. It was at this point that I wrote an article for Mr. Topstep for the opening print about this being a Wyckoff distribution. And it looked like, you know, we just had to nail where was the last point of supply, which ultimately came so many months later. You know, I had been tracking this Wyckoff and telling the guys about it, you know, in December and January. And then ultimately I'd never seen one take, you know, 5 months. So it's easy to lose sight of it when you're, you know, just knocking around like this. But I thought that we could break lower and we didn't. There was some news, some positive news that took us higher. But, you know, one thing I've learned over the years, market tops usually become almost always are obvious after they're over, right? While they're happening, they usually frustrate everyone. And so every time someone calls for a market top, I'm sure that, you know, market veterans do that, you know, with trepidation because they know how difficult it is in terms of timing. I think that market tops, they don't happen, they form, and it's just a series of conditions. But, you know, the one thing that I think that dominates tops is this. And when you think about it more from a not from an economic perspective, but just from a liquidity perspective, you know, big money needs time, right? So think about this. I would venture to say that in this move, I wonder if AI can answer this for me, but I would venture to say that in this move from the March 30th low to our most recent, let's call it the first high, which was on the ultimate, let's use the ultimate high. So that was on June 15th. I bet you that in that move, there's over, you know, a few $1 trillion of market allocation. So one of the biggest misconceptions that traders have is thinking that institutions wake up one morning and dump everything. That's just not how markets work. Think about it. If you had the ability to move the market and you're long something, right? Say you're long ES and you know that you're long 500,000 minis and you know that you want to get your average fill, you know where you want to get out. You know that if you start dumping that, you're going to hurt your position. You're going to hurt your return. You're seeing a paper profit. You want to maximize that gain as much as you can. All right, guys, we just bounced off that 75.17 level. Heads up. 75.17.50 is our current regular trading hours low. We took out the early low, and now the market seems to be bouncing. Let's just gauge this bounce here. Probing it here. 75, 22. I also have a fib cluster of support, 75.18, which adds a little bit more conviction to the trade. See if I can add another one, get that up on the screen. Looking for 5 points on the first, long 75, 23/4. I noticed it a little bit too late. Yeah, that was a good spot. Should have been in that like 20s. See how this materializes. I've got 5 points of risk on it. I had 75.22 and I added one as it started to move up. Let's take a look at NASDAQ. Let's take a look at Russell. I want to see what the VIX is doing after the weekend as well. Okay. NQ is decent. Yeah, look at that. Okay. Yep. It looked below that that distribution that started about 8 o'clock. It just went sideways and it looked below it. It tested the equivalent high. Let's see what we get. What I don't love about this trade is where's it going? You know, where's it going? TLT on the lows. What SPY is doing. All right, I took off the 22s as it came back in on me. Want to get some follow through here. See what the 5-minute chart looks like. I'm not in love with this structure here, but whatever, we'll stick with it. Keeping that at 2 contracts here on a Monday morning. I'm going to take off that 22 again if it doesn't gain any traction here. Yeah. All right, I'm taking off the 22 at 19, keeping that small. Russell making new lows. Yeah, look at that. And so is NQ. NQ is really turning back here. Yeah, it's unfortunate. I took them both off. -3 points on that one. Yeah, whatever. That's just the cost of doing business, I guess. I'm willing to try this again, though. Let's see what happens right now. I'm watching the delta like a hawk here. Yeah, nope. Look at that thing. Oh man, look at that. So 75, 21.50 down to 75. So 75, 20, 75 to 75, 21.50. Watch that zone right there. If we get back up there, there was nobody. Okay, look, there was nobody home there. If we get back through there, they're gonna cover. They're gonna force them to cover. Well, how much was there? Russell making new lows. NASDAQ is firming up. I like it for a bounce here, though. $75, $20, $50. Look at that. They came right back in. So see that's that level, guys. They could not get through that level. What the one that I said, 75.20, 75 up to 75.20, 21.75 or something of that nature. I forgot exact 75.21, 75.20, 75 up to 75.21.50. They got there and they could not get anything going. Could not get anything going. So yeah, look at this. Nope, nobody home there. No one home. I'm glad I didn't try it again. All right, let me go back to the plan, see what I got. Yeah, so that 17s, there was, somebody, there was someone there. They tried to salvage it, but now we're testing into that 15. So watching it for a momentary bounce here. I don't have anything going for quite a bit. So, there is a valid short in this. I just went up there and tested that. Typically, my first contract is really not there to make money. It's often just to tell me whether I'm reading the market correctly. The positions and the losses that I have to be mindful of, and that really, I tend to trade a little bit bigger when I have 100% focus, when I'm 100% dialed in. When I'm on the stream, I tend to keep it a little bit lighter, 2 to 4s maybe, just so I can focus on making sure I'm accurately reading the tape for you guys, and also pulling something out on the side. So when I enter with 1, I'm just, I'm not trying to really maximize profit. I want to participate in the move, and I'm trying to gather information about what the market is telling me. It's way easier to read that stuff when I have something on. I don't know why it is, and I consider that more or less a cost of doing business. So, it's there to, is price reacting as I expected? Is price reacting where I expected? Is the momentum showing up? Am I seeing buyers actually defend the level, or is the trade already feeling heavy? Does it feel like I'm forcing? I can get those clearer reads with very small position, very light position. Don't ask me why it shifts if I trade micros. It doesn't give me the same read. I've tried it. And then if I don't like the answer that the market's giving me, getting out of one contract is a lot easier than it's a lot easier for me to make decisions with one contract and accurately make decisions than if I'm making a decision with 4 or 5 or 6 contracts. Now, one of the drawbacks to that is that sometimes when that first contract is your best fill and you're adding and you're raising your average or lowering your average, you know, well, typically you got a good trade going on and it shouldn't matter. But yeah, that's the opposite side of that. Because I rarely, if I have that one contract on, I'm rarely adding to that, you know, adding to a loser. I almost always 95% of when I add is to a winner. Rarely adding to a loser. All right, watch this band down here. 75.08 to 75.12. We just tested 75.11 quarter. Feels kind of heavy though, right? I mean, Russell's right on its lows. NASDAQ took out that early low. Market does like to satisfy those areas though, that's for sure. This 1014, let's let this 5-minute print. 5-minute print happen. All right, I like the bounce there. Nice. 75.15, looking for 75.20. Long some 15s. Oh man, I didn't realize that the WAD is pretty negative here, team. Heads up. Looking for that. Let me get this stop in here. -1 on that one. I'm out. That did not look good. We could not even breach that 5-minute high. I'm done. Nope, no good. Especially with what the other the indices are doing. They're testing those lows. -1 point on that. This thing's going lower. Wait for it to get. I'm gonna wait for the next area, which is hang on. Wait a minute, look at this. 75.10, 75. It looks like it's running out of steam down here, but it's not the read on. That's not a read across the board. And the VIX is popping up again. What's oil doing? $75.13 quarter, 75.08 to 75.12 is my area. Let's see if we get here. Like to see, yeah, you see the delta just doesn't want to lift. It just, like, they're trying, but it just has that feel to it. Let's see. It has slowed down somewhat. Yeah, look, nope, right back down again. Nope. You got to stand fast here. That's what I was hoping, but it doesn't. I'm not getting that read. I'm not at all. I have a level here too, but it's almost like look, it wants to dig in. NASDAQ is digging in, but the pace of the selling has not has not relented, and you see these momentary spikes like that trade that I saw that I took that I took the 1 point loss on. Like, that's typically, okay, let's see what happens here. That's like the look that I look for in the deltas and stuff, but let's see what happens here. Yeah, and then they're coming they're coming right back in on it again. Wait for a positive print at least on this, right? It's just it's like grinding lower. Sit it out. Wait. Just be patient. Yeah, it just feels like they're dumping. Look at this again. Yep. So every time it goes up, like it went up right there, 75.10. Like that looks like the start. The volume came in there, right? So typically, look at this. Yep. Let's see if they can get above those 75.10s here. Okay. Got some 12s. One contract. Again, this is a valid setup for me. I just want to be cautious here. So I added one 75.13, looking for 18s. I'm get really cautious here though. Took the 13 off, back down to 1. All right, adding it back here. Okay, good. Good. Still looking for that 18 for a 5-pointer. Oh man, I love connection. I'm still offered at 18, I think. 18s. Is it 18s? Yeah, it's 18. It's getting slow. All right, got the 18s, +5 on that one. Got the 18s, team. All right, I'm gonna try to do something here. Let's see if I can get it. Let's see. I think that's it. Obviously, took more than a few tries, so I got some ground to make back up. Got the 15s. Looking for 20. So the 10 point on this one should be 24 quarter. Looking for that fill on 24 quarter. Yeah, I think I was a little early. I alerted y'all. My level was 75.08 to 75.12. So it took more than one shot to get it. Let's see now if we can nail it. I'm gonna need to add back on this one at some point. I just want to be smart about it. Stay locked in on the order flow here. I'm gonna slide to break even. All right, I just got nicked. I got nicked on that one. I'm out. Let's see. I'm gonna got some ground to make up here, so let's see. I do have a valid area. I do have a valid trade. The time is not really on my side here. Let me just take a look at where we went on the higher time frame. Oh, you know what else I wanted to see? I want to check out this chart here. Hang on a second. Yeah, look at the WAD. You see J Morrock? You see the weighted AD? That's not in favor here. Doesn't mean it can't bounce. Yeah. So what did we come down to? I like it. I'm trying to add one back in here. I'm bid at 75. I'm gonna put it in at 75.17. See if I can get it. 75.18. No, I'm gonna pull that. Pulled. No go. Yeah, you know that's but J Mark, I'm not scared of like buying it on the way up. I am not. Like, and I'm not scared of buying it on the way down. Like, you know, because so too often we'll hear, you know, how bad chasing is. You'll often hear, you know, chasing is bad, but is it chasing or is it, hey, now I know that the move is materializing and I want, and I'm in on the move, right? Because if we understand that we're not going to get in on the low, we're going to get in off the low, then what does that look like? And so, of course, the concern and the risk has to be, the job is to make sure that we don't get in at a price that, or our read is not off and that it pulls back on us and we just take needless stop outs. But if you nail the move, doesn't matter where you bought it, give or take, you know, 3, 4, 5 points. Like I just bought 18s. I just didn't get enough of them. Something. Let's see if I can get 23. I chased it up, no doubt. Yeah, but I'm, you know, look, I'm trying to make up ground here, right? I just took it off at 20. I'm just scalping my way back to green. Because this thing could, you know, what? So the reason, okay, I got him back. So the reason for me here is, let me just focus on this, is one, I have a valid setup, right? So my valid setup is 75.08 to 75.12, right in here. And look at what we did, right? Look at what price did at the level. Hang on, 75.23 is what I'm looking for here. Let me just get that up on the chart screen. So switch around so much because I want to make sure I spread out the risk. Need to add here. Let's just see. Yeah, it's coming back in on me, so I'll take that off if it does. One off and out. So look, these are the area right here, 75.08 to 75.13. Right, let me see what this is here. Do I have? That's what I ran into. Let me see the combo. Okay. Oh, you know what? I like this here. Right off the A4 level. Let me just put one on and see how it acts. What is the time-based chart telling me? I don't want it to go below 12s. Oh, no. No, I'm wrong here. I'm wrong. I'm going to wiggle out of this. All right, thanks, man. Take care. Have a good one. Yeah, took it off. So let me just, oh, the A4 level. So yeah, so let me just see the combo chart here. Yeah, there you go. There you go. Let's go. Yep. All right. I didn't have it on, but I should have had it on. I think the problem here is the weighted AD. I think the problem here is the weighted AD, but I'm looking for the low of the day down here. Trying to see if we can sniff out that low of the day. So I think what we're lacking here is any meaningful liquidity. You see, so think about it like this: within the larger context of the entire time frame balance area, every push higher should attract another wave of buyers. But if those wave of buyers are being met by sellers, that's going to, that's not going to break out. You need more in alignment with higher prices than less. And if there's a large tranche of supply, it's going to be harder for it to break out. So somebody sees a breakout and somebody sees momentum, and somebody thinks new highs are coming, and there's somebody sitting there thinking, hey, I want to exit my position. Larger money doesn't move that quickly. It can't. It wants to get the max, the greatest rate of return for their general position. So they're looking at this is why these large balance areas at highs, we have to consider that they may be distribution, because every push higher is creating that liquidity for them to capture, for them to sell into, right? And for them to get exits at better prices from their core position. If they were in alignment, if they were net buyers, then we would see a breakout. But in my opinion, those larger buyers, those institutions, the market makers, the dealers, once price goes too low and it threatens their ability to cover at good prices, get good returns, hit those bonuses. If larger market makers and dealers are seeing that type of movement, what are they going to do? They're going to support. They're going to be in there. They're going to support the market. If they have, think about it like this. You could add any denomination to it. So if you're long thousands of dollars and you're looking for an exit at thousands of dollars of profit, would you throw a couple of $100 at it to get that $1,000 exit? Well, if we'll now add those same kind of thinking to millions, hundreds of millions, billions, trillions, because it's just a different set of zeros that they're operating under. So these larger balances at highs, in my opinion, I think you're seeing distribution, and we don't know whether that distribution is going to end in a decline. It doesn't automatically mean that a distribution is happening. It simply means I'm asking myself, who is buying this move and who might be selling it? And if more are in alignment with buying it, then we should be seeing higher prices. That's not what we're seeing on the higher time frame, which is where larger players love to operate. So that's my point about this distribution. Distribution isn't obvious to us daytime frame traders. We're in the trenches with it all day long. When you look back months later and everybody can point to the top, when you were living through it, it looked anything but. It looks completely different. And at these distributions, one of the hallmarks of these larger distributions is that, one day it looks like buyers are in complete control. And then the next day it looks like sellers are in complete control. Then we make another high, then we make but we make another high and then it flushes. And then we make a new low and it rallies. And it just confuses people who are looking for directional moves. Hard to trade. That's why going back to that move, to the Artemis move that I outlined during the pre-market, saying that, hey, you know what? Make sure that you take full advantage of those times. Those are the times when you pad your account, you kind of salt it away for the rainy days. And this is summer trading, right? Like, I don't even know if I should be going above 2 contracts until like August. And it's something I wrote down in my notes on last week someday. I'm like, maybe I should just dial it in or switch to micros or something. I don't know. Just a thought. I try to spend less time with asking myself if, trying to call a top or something of that nature. I just want to ask myself, what is the character of the auction? What is it trying to tell me? And that's what I think I just shared with you all. And I think your thesis should always have a price where it dies, right? So if we rally above 76.30, reassess, pivot, we're back in bull trend. Let's go. It's good. That's an easier trade. Long bull markets are easier to trade. So if we close below 73.50, 74.75 or 74.75 first, 73.50 second, and then ultimately 72.32, then there at that point, I'm my thesis has to change. All right, I'm out of this. -3 on that one. I'm standing aside now. I can't get any traction. Like, this is indicative of let me see what this chart's doing. Oh, look at that rollover. What time is it? Okay, so what, let me see this. Let me just take a look at this. 75. 75.10. You got +5, -3, -4. Keep your losses tight today, guys. Keep your position sizes small. Now we're back below the A4, bumping into this sell here. So this is an old sell signal right here. See if it materializes. In trading, I think we don't need to know. We don't need to be right. We just need to know. I think more importantly, we just need to know where we're wrong as fast as possible. What do you guys? Let me ask you a question. You know, I've been curious about this. So for generally, because I don't know, I really don't. What's an average? You know, so what is? How should I frame this? What is a stop? What is an average stop for you during like the month of July? Is it 3 points? Is it 5 points? Because you know, sometimes when you trade, when you're in your own little echo chamber, you kind of I think I consider if I take a stop at less than 3 points, I don't even think about it. It's it's just obviously it's managing your account, but that's not something I think about. At 5 to 7 points, that's probably where I'm going to cap out. And the max loss I want to lose on a position is 12 points. Three points, that's your average? 5.5, okay. I guess that's more correlated to your system though, right? Like if you're trading a 15-minute chart and you're using a 3-point stop, it's not gonna work. It's gonna be tough. But if you're trading like a 5-minute or a tick chart, right, you can, depending on the volatility, like the VIX is at 18 today. So, you might want to, if you're trading a tick chart, you can dial that in a little bit. You're scalping on a 1 minute? Okay, good. Okay, good to know. Good to know. When I started trading, my first time frame was actually my first time frame was I can't really count that because I didn't know what I was doing. So my first time frame was a 570 tick chart. And that's when I really started, getting after it. And then after that, I had a problem with that and I switched. So I'd use 570 tick, and then I would analyze on a 15-minute, and then I just blew it out to the 15-minute. And I just recently switched to I show 5-minute on the stream because that's primarily what I try to keep the stream as universal and general, like globally applicable. So the analysis is not my own customized personal analysis, and my time frame is something that is more catered towards what everyone could understand. And it seems like generally most people trade with, or not trade, but they understand a 5. And so that's why I show a 5. But if I am trading by myself, I'm typically on a 15-minute for my point and click trades. And that's why I keep this like this. I have a 15-minute chart that I'm looking at constantly. But it rarely, it's rare that, that I get misaligned on a 5-minute where I'm like completely lost. But it does happen where if I'm on a 5-minute, I can get lost on like an hourly, just completely misread it. A little bit of breakfast. Hopefully something materializes here. I'm not trying any more longs though. Not until we get into a deep support, simply because of the weighted AD. Yeah, that's interesting. That's interesting, large void. Anyone else? What, generally speaking, if you guys are in a trade, manager trade, but I'm curious what time frames you all trade, and what is an acceptable stop loss, where like, so a stop loss that just doesn't bother you versus a stop loss that gets you, bothered. I mean, or do all losses bother you? I mean, I guess that's a valid question. I'm desensitized to stop losses. Like, I know that they happen. It's something that I've come to terms with, like and so I guess that makes it easier for me to, you'll often hear me say, it took 2 tries to get that trade. Like, I'm totally fine with that. It's funny because, speaking of stop losses, it's one thing I tell my baseball team all the time. And honestly, I think traders need to hear it even more. I tell my players all the time, Control Alt Delete. After every bad play, just hit Control Alt Delete, reboot, reset, restart. Act like that play didn't happen, because it can't help you anymore. In the market, it's slightly different because you're paying for information, and you should probably view it that way. And if that information serves you to get into a good position, then that was just the cost of doing business. But, I guess it's different because in baseball, you can make an error and the game keeps moving. In trading, if you make a mistake and your P&L gets hit, your confidence kind of suffers. And if you're not careful, your decision-making follows. So, I don't want to be facetious about it, but I want to, years ago, I just removed the weight of, if you think about it, if you're a career trader, if you're a professional career trader, you're going to get exhausted if you get hot under the collar about every stop. Like, that is just an emotional roller coaster that I wouldn't wish on anyone. I try not to let one trade write the next one, right? I don't want to let one trade, write the next one. Of course, I'm aware of my P&L. Of course, I want to make money. Yes, that's just common sense. I don't think I have to explain that. But one of the easiest traps to fall into is trying to fix the last trade with the next one from an emotional standpoint. I think that's how tilt happens. Yeah, we're back down testing those lows again. Ooh, look at this low. Look at this. This low is not good here, guys. This low is not good here. Let's see. I think I can scalp this. Is that something I want to do? What's this? Oh yeah, for sure. Let me see. Dang it. Okay, come on up. Look at that print. Ooh, all right, screw it. I got some 08s. I wanted to get like 10s or 12s, but I couldn't get them. But I'm essentially now, if you guys are following the market blueprint, using level number 4, I'm using setup number 4. Sorry, setup number 3. Well, no, let me see. Setup number 5. Setup number 5 is what got me the 5 points before. It's only one contract. Shoot, I have to use the bathroom. Timeout. Be right back. All right, I got that first cover. What account is this? Finally got the direction right on the day. Nice, got the first, that got the next one at +6 points. So super happy about that. Making something here. Let's see. Not gonna look at the P&L though, because that would be that would have an effect. I think the lesson of the day for me is making sure that every trade has a clear mind, no baggage from the prior trade. Okay, here we go. Coming back. Wait, Let's fill here. Wait, for 98. 98 quarter for 10. Okay. 98 quarter for 10. 98 quarter for 10. Okay. Let me just do some. Let me just look at this better. That might be all I get. Let me just take the 2 right there. So +2 on the set on +2 on 2, +5 on the first. We're wicking down here, and we are at a support. Excuse me. Oh, 675. Okay. Yeah. I'm out. -3 on the second. Excuse me. Let's see what we get here. Let me see what is this? 75. Oh, 7,500. No way. Yep. Okay. I missed that. Oh, nope. Don't do that. Just wait. I missed setup number 1. Okay, how do I get this? Is there still an area for me here? Oh yeah. I missed that one. That's gonna happen. I got one on here. I'm gonna try to. I have a support here at 75. Terry says your trade number 2 support buy and number 8 BDS are the same. Are the same level. How do you deal with that? Okay, your number 2 support buy. Right. Okay, I understand. Breakdown short. Okay. Yeah, so the reason why that's there today, Terry, so look at it just the same way. Good question. I was hoping somebody was going to ask that because again, so the way we want to look at that, Terry, is that level is going to be support. And if it fails, it is if the analysis plays out, there's going to be enough room to the next target to justify shorting it. So my trade plan over the years has been developed on this one on these economics, I should say, on this mathematics, every trade, every level that's on there has to satisfy a 10-point target, but that's minimum, so that I can satisfy. But my trading system needs a 43% win rate, and at that win rate, it needs to hit a 5-point scale and a 10-point scale, and in order for it to be, sorry, it's a 63% win rate if I hit 5 and 10 points. If I get 15 points, I only need a 41% win rate. So when over the years in developing my trade plan, similar to the continuation long, how I mentioned that, hey, the continuation long is typically, if you follow along and you watch it over time, you're going to see that often if it first fades from that level. And what I learned from the continuation long was that, so I would fade that level because we would be, when I drafted the plan, we would be under it. So I would draft it as a resistance. Okay. And then when I drafted it as a resistance, it was a trade that didn't yield. Like, I'd get the first 5-point target and then we would chop around, or it would never, on the continuation long level, the success rate of it hitting the third target at 15 points was, I think it was abysmal. It was like, I think it was less than 10%. So all the trade plan was conceived like this: to hit a 5-point first target, 10-point second, 15-point third. So what I realized with the continuation long level that kept popping up was that it was hitting the 5-point target, but the win rate on it hitting the 2nd-point target was trash. It wasn't. I don't remember what it was, but I know the 3rd point was less than 10%. And so, but the level kept being there, was valid. And what I started to notice was on the other side of that level was the better trade. So I would let it fade from that level, and then I'd get long it once we converted it to support. That's why it's typically like around the overnight mid, or it just lines up to be the overnight mid or the overnight high or overnight low, something of that nature. So when we see a setup like today's number 2, which is the same idea, right? It's the same level. It's because on the other side of it, if that level, so first, if we're above it and we trade down into it, I'm gonna long it like I'm long now, right? I just bought those 75 06s, and I hope to add 08s. So the first time the level comes into it, it should be a long. I want to treat it as support. I don't even want to think about it as a short trade if we're above it. However, in the analysis, when that level appears that way, I see that, hey, if this level fails, there's no support below this and you can see it on today's plan, right? The next support isn't for 40 points. So if that level fails, I don't want to sit there waiting for 40 points to long the next level. If that level fails, it converts, we show acceptance below that level, I want to scalp that short to the next support. Does that make sense, Terry? I'm glad you asked, though, because that's a good question, and that's something that needs to be explained. Yep. So first look at it. If we're above it, it should act as support. And if we're above it, close your eyes to the short. Treat it as a support buy. If it fails, but not like price just looks below it for a 5-minute candle, like let it get below, let it go 5, 7, 8 points below and stays there. Then when it comes back to retest that level from above, from below, then at that point I want to sell it and I want to get shorted, because I know I have enough room to hit that 5, 10, and 15 point target. So this one's working out pretty nicely here. I got 06s, and I just got Obviously, I didn't get big enough, but I'm not trading more than 2 contracts today. I hope that makes sense. Yep. So I bought 06s and 07s. Just got the target. I just got the target. No, I thought I had 07s. It was actually 09s. Yeah, thanks, Terry. Yeah, I'm just, honestly, like, no hubris. I'm just glad that they work. And for years I've had levels, and I'm the people that I share them with. I'm happy that everyone can exploit them just the same way I am. That's literally it. And then, for the nominal fee, which comes down to like 50 cents a day, for me, like, if I were like, I'm looking for value, I also don't want too many different perspectives in my trading. I purposefully don't listen to a lot of people, because as interesting as they may sound, as much as I might respect their work, it will give me a bias. And so I tend to like keep that, the people I read and the people I look towards, to a small, like 3 or 4. And if I would pay, I think about the Market Blueprint as providing value, and also as for the fee. Like, I used to give it away for free. I just thought we all needed an edge. But what happened, the reason why I started charging, and it's like 50 cents a day. And the reason why I started charging was just because of the time commitment. The time commitment, to doing it every day. And then I can put it together for myself in like, 10 minutes, but, to organize it with the clock. And if I thought about it, if I was a trader and I said for 50 cents a day, I could have high probability levels, and I can know what time the turns are going to come. That guy's not getting rich off of it. It's just like, it's almost like a tip jar. That's honestly the way I see it. It's like, hey, here's 2 quarters for your time. I'm just happy that they work and that people get to exploit them. The people get to exploit them. It's been a long time trying to get, fine tune it to get to the right levels, that are going to be high probability levels. And it's, again, I say this very humbly and very respectfully. 2 weeks ago, the Market Blueprint had the high and the low one day. It had the low 3 days of the week. On Friday, it had the high and the low. I'm just really proud of that. I don't do any marketing or anything. Just, whoever was in our orbit can get to enjoy them, can get to use them. Trading is hard enough. Trading, even with the, I wrote about this in this, I wrote an article this weekend on Substack. If you want to go check it out, it's at Manny Trends. And it's titled, "You didn't get introduced to trading. Trading got introduced. You didn't get introduced to trading. Trading got introduced to yourself. Trading introduced you to yourself." And one of the lines I wrote in there was it was about. Hang on, let me see this. Oh yeah. Oh, thanks, Terry. Hang on, let me watch this because I'm really close to my entry here. very close here. Let me just make sure I tighten it up. I don't want to get back. I don't want to get knocked out. This could be a low. I can always put it back on. All right, it looks like we might stabilize. Yeah, so I wrote that article this weekend, and look, everybody knows that trading is hard. You know, trading. Nobody signs up for trading thinking that they're going to start out as one of the hardest personal development journeys of their life. But one of the lines that I wrote in there was, you can have two traders can have the same exact levels, and two traders will have completely opposite results. I think we all know that pretty well. We've all heard it. And that was something that used to infuriate me, because I was like, gosh, you know, like, it's so, like, why can't I figure this out? Why is it that, you know, my mentor can trade with a bar chart and extract more money than I can, and I have 15 monitors and 18 indicators, and I can't break even? And so during those tough years, I remember coming to terms, if I could ever help someone else out and help them shorten the journey, who might be feeling the way I'm feeling, that way I was feeling on that day, I said I would do it. So over time, you know, the market blueprint, I've been drafting trade plans for over 10 years, but I just started to, you know, share it publicly, like, I think it was around December. And so people were getting some value out of it. And so I'm glad that it helps people out. Take a quick glance here where we are on the higher time frame. But Terry, if you see that, right, like, if we let me just see, what time is it? It is 11:15. I don't know. Let me look at the low. Yeah, that could be it. But Terry, if you noticed, right, when we came down into those 7,500s, I asked myself, I think, what is that? And what I meant, like, what is that level? Like, why don't I? Because I expect to know where price is going to bounce. I expect, first off, unless we're just oscillating within the daily range, I should have an idea why the high was the high, why the low was the low. And so when we got down there, I asked myself, what is that? And that's when I went back and I looked at the trade plan, and I realized that it was setup number one. I was in the short from the continuation long failure. So the continuation long failed, and I got short 75.06. That's when I got five, 2 points on two, and then the last one I had -2 on it. Just battling all day long. I truly believe the better you understand yourself, the better you can understand why you make the decisions that you make, the sooner, like, the repetitive mistakes stop. And then I guarantee you, one day, if you do the work, one day you start laughing at yourself. Like, you'll start laughing at the old you. I guarantee that. You know, I think everyone thinks that confidence comes from winning. You know, and I actually think that confidence comes from the self-discovery portion of trading. Yeah. So fair value is just so fair value is what the day is the difference between ES and the cash market SPX. Sometimes the cash market is better to analyze than the futures contract. It is what larger institutions use, and these levels tend to be a little bit crisper. So each day I figure out, there's a portion of the analysis that comes from the SPX cash market, and then I translate that to ES prices because that's what we're trading. It's more a note for myself. And Terry, just so you know, like it's probably going to be next week, but the key level section, I don't think that it's providing enough value, and I'm going to change that. I think that, so the way I'm able to assess or come to like an idea of where the high and the low of the day might be, I'm going to change that level to the key level section. Instead of it being like, hey, if we get above 7,500, there's strength. If we're below 7,400 is weakness. I think to all of us, it'd be more value if we knew, hey, if we get up into 7,500, 7,520, that has a strong possibility for being the high of the day, or the range would exhaust there. And then I'm going to try to bracket the day instead. But it more has to do with like how you trade, right? So I'm more of an inside out trader, and what that means is, so I'm trying to catch directional moves, right? So if we're inside the larger balance, right, I'm trying to catch a directional move. That's like, it's just a loose term I use for inside out. I'm trying to break. Ultimately, I'm trying to get into a position and watch it and ride it on the breakout. There are outside in traders who are trading more mean reversion, who are trading like waiting for price to get up here, waiting for price to exhaust, and then they're trading the short idea to get back into mean reversion. There's no right or wrong way to do it. It's just different approaches, different philosophies. And so for that trader, I think that bracketing the day would probably add more value. Those are the trades that I take sometimes. All right, we're bumping up into VWAP 75.21, 75, 75.09, 75.24.50. We're coming into a interesting part of the day. And Terry, if you got to use the clock today, then then I should not have been. I was short into that low, and look, you can see like on today's market blueprint, we were expecting a early high starting at 10 a.m. and we got that, and then we were expecting a low into the 11 o'clock hour, and we've gotten that. Pretty cool the way that works out day after day. Not a lot of trade plans will tell you, what time to trade it. I think it just increases our probability of success. Time out, guys. Somebody's at my door. Sorry about that. Yeah, so I'm going to change that up, Terry. Hang tight. I'm going that section. I want that section to provide more value. So Terry, look now here, right? Since we are still the way I'm approaching it, right? We're using the clock. The time window is still open, right? So the way I look at that is, so say I had missed this trade, like I'm still looking for a pullback in here, and expecting that to hold. So that trade might, say I might gain this early as the early low. So we come right here, we pause like we're doing now. What I've seen over time is that, yeah, that's the low. We ID'd it as the early low, right? But there's a higher probability that we'll get a higher low somewhere in here. And so there oftentimes those windows, if you don't capture this move, you can capture this move if it's early enough in that window. So you want typically, like I want there to be 2 15-minute prints to the back half of the window. So say the window closes at, let's just say, what time is it? It is, all right, it's 11:30. So say the window closed at 11:30, I would want to allow a 15-minute chart to print 2 candles to be able to print 2 candles. So say we're pulling back, I would want enough time for us to complete 2 candles from this low. So something like this. I'd be looking for something like that. So if this is, say it closed at 11:30, then I want to be somewhere in here by 11. Like by 11, I don't want to be coming back. I want to see this by 11. All right, let me just take that out. Switch this tool. I want to see this by 11 so that I can get this print and this print into the window closing. And that's going to be some of the nuances. Those are going to be some of the nuances that I talk about when I do the workshop. Again, so I'm coming back. So heads up, a good time to announce this is look, I didn't realize I had these questions sitting here. I got some questions for social media. Hang tight. Yeah, we breached it quite a bit. And NASDAQ and Russell are putting a lower high. So there's nothing to feel confident about. And then let's look at the WAD, the weighted AD. It's not improving very much. So I'm going to look for it. I'm stalking an exit on this. Or at least I don't want to see prices get below this low at 75.14. So I either take an opportune exit on a spike, or I have to accept that it's going to pull back on me to 14.50, and I only get 5 points. That's the deal on this. Watching NASDAQ here, see if it gets up. Oh, no. Plus 14 on that one, guys. Plus 14 on that one. I'm out. Oh, crap. Dang it. I exited manually and actually put me a short one. See if I can wiggle out of this without getting into too much trouble. I went to exit and I exited manually and it filled the order. All right, I'm out. I cleaned up that mistake. I got a point on that mistake trade. Had to stay cool there. So real quick, I had I was doing a simulcast on I have some social media questions that I wasn't aware of. Let's see. Manny, so what's your take on tops? Are they actually predictable? You've mentioned distribution before. Have you seen some that lasted months? Yeah, so Manny, what's your take on tops? Are they actually predictable? You've mentioned distribution before. Have you seen some that lasted months? Yeah, so Ayuba, that I don't think, I don't know if you were listening. I don't know if you're still listening, but tops are not predictable. If you're following along, I think I kind of went over that. I don't believe that. In fact, I'm thinking the complete opposite, right? I don't think that tops are predictable at all. I think that tops form, so they take more time to develop. I think that that's what gets most bears, most armchair bears into trouble. So they start predicting tops, thinking that the market does, let's just use this chart that's in front of us as an example, but they think that markets make tops and that tops look like this. Right, that we rally and that just the strength of the rally is going to equate, and we're going to have an equal and opposite move. And in fact, what I'm saying is that tops more often than not look like what we went through in the analysis this morning, I'll show you here. And what I'm locking in on is, I think that any top that we see out of this, 6-year bull market, macro bull market, is going to look more like this. It's going to be a top that forms. And then I think that once retail's all in and the market makers and dealers are all out, I think that it can accelerate at some point. But I think say this is what's going to happen, hypothetically speaking. I think that this time where it stopped here at this point and we found support, I think that eventually one of these is going to come down. It's going to form a top like this. We're going to come down, and then it's going to rally, and that's going to be the one that gets retail long. And then this next move lower, this one is going to accelerate. This will probably be like a 300 or 400 point move or 500 point move in like 3 days. It's just going to be it's just going to be a flush because no one is there to hold up, because maybe, for lack of a better term, Wall Street's already out. There's no reason for them to keep prices higher because they don't need to unload any more inventory. I think that they got quite a bit of inventory off in this last distribution, and the nature of the one that we are in now, let me just delete this and start all over. The nature of the one that we are in now, unless this one goes, extends higher, then this is telling us this is a big piece of information. If we come back and start testing back below here, then it's going to tell us that this was not a bullish supported move. And I think that this next move will be the one that, like I said, I think if it happened from here, I think we get down here. I think that it breaches this low. I think we come back up and test some local low, we'll make some local high here, a lower high relative to where we were. And then I think that this move takes this low out. Because all of this inventory is out of the market. Everybody lightened up back here. Everybody, everyone, keep an eye on the VIX. I mean, if you look at there are other tools out there than the VIX that are flashing warning signs, right? Like you can look at basic breadth. Mark says TLT is going to matter. That's really, really important. Yep, I agree with you on that. Let me just look at TLT. Yeah, exactly. No, so just as a heads up, J Mark, I'm bullish bonds. Think about it, right? Look at what we've been seeing. I wrote an article a while ago. Maybe I should repost it. Here with the title. Let me see. Here's the title I wrote. I think it matters. I think this was back in April 30th. And if you notice, what I've noticed is that bonds are bid. Bonds have been, there's just been, you don't see it that much in the auctions, but if this is, I think this is accumulation down here. For how long is this going to stay down here? Let's just zoom out. I'd love to hear Trey's thoughts on all this stuff. I know that he's pretty good on this time frame. I wish he was around. I'd love to pick his brain. But look, we're going back. I think this is all-time chart. Let's just go max monthly chart. I mean, look at where we are. Look at where TLT is. Now, do you think that in I don't know, in some time in the near future, that this is going to go down here and maybe go, or is it going to continue to do this until it matters, like Jay Murdoch is saying, and then it's going to start moving its way higher? And then what does that look like for risk assets? Look at what it did in March. It was no joke. Yeah, I just think that, I think risk assets are due for a big shakeout. I don't know if it, I'm not saying it's going to be like the end of the, 30-year bull market or anything like that. I just think that, I think we move lower to like, I don't know. I think we move lower to like, maybe into the 6,000s. And then everybody will start talking about, inflation and all the things that we're seeing now, right? They're not going to, Wall Street is not going to let like mainstream media talk about ruin their positions. Like if you were the head of JP Morgan and you knew the guy, like you knew that you're having dinner with the guy at, like, I don't know, CBS or CNBC or something, and you've got trillions of dollars and he's got his portfolio with you. Hey, can you do me a favor? Hey, at least at dinner, I'm not fine the economy. I think it's bullish. I think we're going higher. And you're unloading, you're selling. It's classic. This was always happened. The only error would be to think that this time it's different. Again, but we have it. Look, I can have broader views on where the broader market is going. I don't think that the broader bull market is over, but I think that it's due for a shakeout. And the great part of all of that is that as daytime frame traders, we don't have to worry about any of that. We focus on our time frame, and we execute our 5 and 10 point trades. 15 points, maybe we get a runner. That's it. Look at that pullback was buyable. See that? Pullback to 75.16. It's definitely buyable. All right, I didn't capture it. Yeah, you said something interesting before, J. Mark, was like, we were talking about chasing and you always hear, don't chase. I get it. But sometimes I think we oversimplify so much of this stuff. Like there are general rules that say this is good, this is bad. If I'm waiting for confirmation and the trade should move before I get involved, by definition, buying the exact low rarely happens. I'm buying after the market starts proving it and other people have committed money to the idea. And on a larger time frame, it's no different. We just have to wait for the signs, and we have a front row seat because we're watching it every day. The trick isn't avoiding, the trick is not getting too overly involved with every move. All right, there was another social media question. Let me just get my phone. You still call, sorry, I just seeing these now, guys. I hope you're still listening. You keep talking about distribution. Oh my God, I just went over this. You keep talking about distribution, but we're still making higher highs. Okay, I just spoke about that. I'm gonna wrap up. Yeah, Terry. So I'm doing a workshop. I'm gonna go through that in a moment. Let me just get through this last question here. Do you always start with one contract? God, I think I went over a lot of these. Do you always start with one contract? No. So I don't always start with one contract, but I consider that one contract. It's helping me get a feel for the market, and I'm very comfortable with whatever the outcome of that is. You'll see that I'll take a 3-point trade. If you take a 2 or 3 point stop on one contract and it bothers you, then don't do it. Find a different way to do it. Maybe do it with micros. But for me, it doesn't really affect me. I just see it as a cost of doing business. If I'm right, I'll get in a position and then I'll add to it. If I'm wrong, I'm okay with taking the stop out. I just won't let that balloon. I don't ever think about it. I'll exit it quickly, and I don't do that all day long. Like I'm not racking up, 20 points in losses trying to probe the market. That's over trading. But the difference between over trading and like testing a thesis or an area. And then how do you decide when a trade has earned another contract? Oh my God, that's a good one. So that's a good question. That's like more, how do you decide when the trade has earned another contract? So there's no linear answer to that. It's not black or white. The only way I can simplify it is, hey, if it's moving in your direction and if it's moving in my direction and I can add, I want to add one in like as soon as possible, but I don't know if it's going to be moving. And so I typically, like, I don't want to add if it's more than 5 points in my favor. I think that 2 to 4 points is that sweet spot. I don't want 4 points is a lot. I want maybe 1 to 3 points. I could rarely get a read unless it moves at 1 point, right? Unless it moved and then it came back. But then at that point, I'm thinking I might be wrong. If I'm right, then it should just go. It should never look back. Do you ever regret not going full size? Every time I'm right. every time I regret not going full size. Every time on every winning trade that I'm undersized. Sorry, I'm not trying to be facetious. Yeah, I regret it all the time. I regret not going full size. But again, I just fall back to the process, right? And I know that, I'm grateful that I got one on or two. And then I just try to stick with it, and try to stick with it as long as I can and try to get an ad on it. I think the key thing though is that I'm not like, I try not to become every trade. Like I don't want to, it's just another trade. I know I'm going to have hundreds of them a week. It's my job to not let any one trade be so impactful. That's why I don't want to take big losses. I want to trade often. I want to test ideas. I want to get in. I want to get out. Yeah, I think that, in order to be successful in trading, I know a lot of people don't want to hear this, but I think you have to have you have to have a part of you that just doesn't give a fuck. Sorry. You're just like, what? I just don't care anymore. Like, okay, like wins and losses are gonna don't go broke. Obviously you can't go broke, but I hope I hope that makes sense. Like, not every trade is that important to me. I hope that answered your questions. I kind of bundled three of those. I've kind of bundled three of those up together. Oh my God. Dude. All right. You sure? I get it. Are you watching right now? Yeah, I'm gonna get off in 5 minutes. Okay. Oh. I thought that you, oh no, I thought you, hang on. Okay. There's a trader I'm coaching and he's, I thought he pops his head in the room. He's not in here right now. I thought he was in. All right. So, hey guys, I'm going to put a bow on this day. I'm going to step out, stretch the legs, go for a walk. Let's see. Okay, so yep, I knew I had one more. Terry, yes. So I'm gonna do a workshop. So I have all the great part is that I have all the material and all the hard work is done. The only thing that's holding me back is that, so I want to do it in. So I don't know if you guys have noticed, but now there's a Manny room in the tab here, and I didn't want to do. I want to do it. I want to speak to the rest of the guys, the Marlon and David and these folks and Danny, before I do it, so that we can bundle it with something else. And I didn't want to do it this week or last week because I knew last week I was going away. This week I'm going away. So I wanted to, it's just been the summertime schedule. I also wanted to do it around the time where trading wasn't so dull, but I guess that's probably the best time to do it. So with that said, I'm also giving you guys a heads up. I'm leaving for Tennessee tonight. We're going to the Alliance Fast Pitch National Scouting Tournament. So my daughter's playing in that tournament. She's hoping to get some eyes on her. And so we're leaving for Chattanooga tomorrow. We're going to be able to go see the Battle of Chattanooga and the Battle of Chickamauga. And we're going to have some fun out there. Oh, yeah, you do? Nice. Nice. Hey, maybe Nash Rancho, I'm going to, I'll be checking in on Wednesday. So I'm going to be traveling tomorrow. And then on Wednesday, I'll have my laptop with me. So I'm going to check in on Wednesday. But tomorrow I'm going to be traveling. So there won't be a market blueprint tomorrow. But on Wednesday, I'll check in. And Nash Rancho, I'll hit you up. I'll send you a message. Maybe we can chat a little bit more. Oh, for sure. Let me just get that down. I'll send you a text for sure. Hang on a second. Nash Rancho. All right, team. So, hey, listen, remember to react, don't predict. Use your, yep. Oh, okay. I'm gonna hit you up. I want to know about maybe you have some cool eateries or something like that. All right, guys, thanks for checking in. Again, I appreciate your support. Hopefully I added some value to your trading. Coming up later on this week, we got Bo, we have David, we have Danny, we have Niels. Lineup continues, guys. Thanks for checking in, and I will see you all next week. Have a good one, everyone.